I'd say firstly has been our service level. So we've been able to get our SLAs down to 2 days to conditional approval. We appreciate how important it is for brokers to be able to give a fast and efficient service to their customers, and something we've laser focused on in the business. I think secondly is we've gone live with our partnership with MSA through our settlement process. That means about 80% of our settlements today are going through that channel. And what that means is from the moment a credit assessor presses formal approval on our origination system, the docs are sent digitally to our customers and our brokers within 90 seconds. And third is a major milestone for us, which is the launch of our reverse mortgage product, Brighten Life. I'm a huge believer in our older Australians being able to have access to this product. The reverse mortgage isn't a hold till death product necessarily. It allows customers to be able to release equity in their home whilst they're going through a phase of their life where they're potentially not earning the income that they used to in their younger years. But they've got the equity in the home, there's no need for them to downsize yet, and this product allows them to do that. I think the federal budget has had 3 key impacts onto the brokers in today's market. The first one is the removal of the SMSF product, or more importantly, the removal of limited recourse borrowing arrangements within an SMSF. This effectively has removed the SMSF product for all of the non-banks, and obviously brokers' customers are heavily impacted by that. The second one is the removal of negative gearing and the removal of the CGT discount on investment properties. In the short term, we've certainly seen a stifling of activity in the investment sector, and it will be interesting to see how this plays out in the future. And very importantly, in the very short term, the immediate short term, is conditional approvals. Where brokers have conditional approvals in the market where they were reliant from a servicing perspective on negative gearing to service, we strongly encourage brokers to be reviewing those conditional approvals and speaking to their customers before they purchase a property, because these loans are highly likely to be reserviced, and if they were relying on negative gearing to service, they may not service when they come to us for formal approval. So please, brokers, we do encourage you, where you do have live conditionals in the pipeline for investment properties, to review these and speak to your clients. Our view on SMSF and limited recourse borrowing arrangements being removed is pretty in line with what you're seeing in the commentary in the market. It was a huge shock, obviously, to the market, and it's a sector that non-banks predominantly service, as the banks pulled out of it quite a long time ago. I don't think that the banks pulled out of it for any other reason than they're quite a hard loan to underwrite, and they take a lot of time, and banks are very focused on prime deals. I just don't think that this has been thought through very well. We should be encouraging Australians to take control of their superannuation where they would like to, and not necessarily just have them in industry super funds. And where they do want to take control of them, they shouldn't be cut out of a large sector of investment strategy, and that is residential property. It is highly unlikely that the common Australian, at any certain stage, well before retirement, has enough equity in their super fund to be able to pay cash for a property. So we're effectively removing the ability of SMSF members to be able to invest in residential property. It means they have to be overweight equities, or even worse, they may want to move into riskier sectors such as commercial property that they otherwise wouldn't have wanted to go into. I don't think this is the right outcome for the superannuation industry, and obviously it does have an impact on our broker partners. We are working with industry regulators to have some tailoring to the legislation. So whilst the legislation has had royal assent, we're still working through with governments in terms of the technicalities around what will actually be legislated. So we're hopeful that there will be some amendments, and in the short term we should be being guided by what is royal assent, which is effectively 45 days to complete those transactions. The impact on the investment market with the removal of negative gearing and CGT discount in the short term is definitely evident. We're seeing a reduction in the amount of applications we're receiving for investment loans. And there's a number of factors behind that. I think from a purchaser side, I think investors are very much in a wait and see period. They don't want to catch a falling knife. And from a vendor perspective, they're certainly not willing to decrease their prices materially because there's no need to. There's no liquidity event or huge macro shocking. So what we're seeing is auction clearance rates down in the 40s, and that's very, very low where we traditionally see them, between 60 and 70, and 65% is where we see a healthy market. So that you can definitely see that the number of transactions have decreased in the investment market. From a long-term perspective, I do expect the investment market to hold up. I still think Australians will believe that investment in property on a 5 to 10 year investment horizon is a worthwhile investment, but there's no doubt that the change in legislation has definitely made people nervous and is giving everyone a wait and see approach. I think despite all these changes, Brighten has positioned itself very well to help brokers through this period. Brighten has 16 products on its product shelf. So we're very well positioned to help brokers through the diversification strategies they may have. Our commercial shelf has become very popular with brokers. Each month we're receiving a record amount of applications and in turn are doing a record number of settlements. And that's on the back of the flexibility of those products. We have full doc, lease doc, alt doc, and our non-code lift product. And more importantly, our loan sizes are unmatched in the market. We're doing loans up to $15 million. And this is being very well received by brokers. We've also, as we've talked about previously, have launched our reverse mortgage product. That's very relevant at the moment, given that our customers' primary principal place of residence will become more of a factor if they decide not to invest in investment properties. So as the equity in those homes increase in the future, we could see Australians wanting to access that equity and using that reverse mortgage product. So overall, we're very happy with Brighten's breadth of product suite, whether it's construction, whether it's vacant land, bridging, our full doc or alt doc products, or all the specialist products we have, including the commercial space. We're very well positioned to assist brokers with any non-bank clients that they have. Whilst the post-budget landscape has introduced uncertainty in the market, property market has had cycles up and down over a number of decades, and the market has remained robust. I think we just need to ride this period out, see how the legislation lands, and I'm sure that activity will continue in the Australian property market and the market will remain robust over the long term. I think as an industry, it's important we remain united. There's been a number of reports of fraud lately in the market, particularly broker fraud. And whilst we are all competitors, whether it's brokers, aggregators or lenders, it's very important we remain united. There's only a very few small amount of bad actors in this industry, and we're aware of it or across it. We need to call it out and remain united because the integrity of our industry is of paramount importance for all of us. Thank you everyone for your support, and I look forward to speaking to you again soon. Thanks.